Recently, in 2022, you have seen that big brands come up with the IPO. Brands like Paytm, Nykaa, Policy Bazaar, Card Trade, all these like big names. We know them as a big names, but the moment they entered into stock market, the moment they come up with the IPO, and whoever has subscribed to them are in loss. I'm not talking about the promoters. I'm talking about the retail investors like you and me. Have you ever thought that IPOs are not the way we see them? IPO has a very dark secret. They have a very dark side also. And in this video, we're going to explore about that dark side only. And guys, this is Pawan Sharma. And if you haven't subscribed my channel, please go ahead and subscribe to it and then move on with the videos. Let's talk about a simple factor like Paytm or maybe the Nykaa. When Paytm come up with the IPO, their price band was somewhere close to 2000. Have you ever thought that how this price band comes? Let's talk about that. Let's say we are two in this partner in a company, me and one of my friends. Okay, so we are two guys who are running this company, and now we need funding. So let me give an example also. You must have seen these Shark Tanks coming on television, and they are offering, okay, I'll give you this much amount, I'll give you that much amount, and I will from that amount I will take 10% of equity, 25% of equity. I will have a share in your company. Okay, so let's say we are two promoters, or I would say that the two owner of a business, and now we want to raise money. To raise our money, we approach someone or maybe an investor who deal in same kind of segments. Let's say I approach XYZ guy, or maybe any person who is known in this market, and I say I want some money, and he said, okay, I will give you 1 crore rupees, and but or maybe 2 crore rupees, but I will need 5% of your share. The moment that person give us 2 crore rupees, and we say, okay, yes, go, and we're going to provide you 5% of share. 2 crores, how much? 5%. 100 crores, how much? It's almost like 200 crores. Immediately, the very same moment, the market capitalization of that companies goes to 200 crores. Okay, after 6 months, the company is running, it made some profits, maybe for like few lakh rupees, few crore rupees, the profit is going on. And again, another investor approaches, and now the person says, okay, I want to invest in your company, or maybe we approaches that person and we ask him to invest in our company. Scenario could be anything. And now he said, okay, we're going to give you 5% share. Now the charges will be 4 crore rupees. So now how much 5% for 4 crores? So you can understand the valuation of that, 200 crores, 300 crores. Okay, but in fact, overall, the company valuation is only on papers. It's only on papers. There is nothing called 400 crores, 500 crores in reality. That's how the valuation is done. That's how the IPO valuation is done. Now, let's say now we have 10% shares with those two guys, and 90% we are holding, like me and one of my friend, or me and one of my partner. So now we are holding 90% and 10% those two guys. We want to come up with an IPO now. We want to raise more money. Now, these two guys, or maybe I have another third guy also, another like 5% with them also, 3%, 4%, whatever the amount is. So these three guys said, okay, come up with an IPO. Now, that's where the real game start. Anyone who is investing in your company and who is an early investor, they will never leave you with a small profit. They want big fat profit, and those big fat profit comes with big valuation. The company might not be generating enough cash, enough you can say revenue, but the price band can be 1000, 2000, 3000 also. The share price can be anything based on that previous valuation. It does not matter how the company is performing, or actually the overall company is matching to that particular price band. So, but these three guys, they are initial promoters. They will push us, they will force us to come up with a price band which should be higher so that they can have big fat profit, because they are the guy who will take maximum money. Now we come up with an IPO. Let's say the price band after this, all this valuation, if you look at the Paytm, you can understand that how the valuation works. They raise 600 crores just before the IPO, and they raise the valuation of the company. Earlier, the price band was like the market valuation. As per the market valuation, it was expected that the price band should be anywhere between 450 and 650. But you understand that the price band which they come up with is almost like around 2000 rupees. Make sense? Does not make sense. And right now, the actual price is around the right valuation only. So now the IPO part comes. They come up with an IPO, and the price band, maybe let's assume that the price band is 1000 rupees. Now who are the participant route? 2 we guys and 3 investors. So we are 5 stakeholders right now. So we want that IPO should not fail. We want that IPO should not fail. So what we'll do, we'll invite someone else. That person can be a known person, that person can be the market veterans, anyone, like, or maybe the company who is promoting our IPO, bankers, he can be anyone. And what we will do, we will offer him a very good price. Let's say we will say that, okay, I'll give you same stock, but for 750 or maybe for 700. That's called pre-IPO. And why I'm offering that discount to that person? Have you ever thought of that? That discount is offered so that the price, the IPO does not fail. And when all this setup is done, everything is in place, then we'll come up with an IPO. So retail investors will go for 1000 rupees IPO only. Right now, all these big names, their stocks have fallen more than 70% from their IPO value, which means if let's say I have invested 14,000 only, from that 14,000 only, I am in a loss of 70%. Think about people who have taken big amount, 5 lakh, 10 lakhs, 1 crores, 2 crores. They have lost a big fortune from their invested amount. So guys, understand 2 things. First of all, the market valuation. Understand that what is the actual market valuation? Is it the right valuation, or is it just the fake, the one just on the papers only? Most of the startup companies just have the valuation only on the papers. What Paytm does? Nothing. What Nykaa does? Still they have stores online, they still have products, right? What does Car.Dekho does? Nothing. They just have a portal, nothing else. So they can have any valuation. But companies like industries who actually manufacture the products, they have valuation based on their products, and lot many things are considered. Second of all, understand where the money will be utilized. Understand who are the real investors, because at times the investor could be someone who we do not know. The person will take up the money and they will leave immediately, leaving the retail traders with big losses. So always keep in mind that where the money will be utilized. If it is just for the promoters, if it's just for the initial investors, never apply in that particular IPO, because they just want big fat profit. Their job is done, they want to exit, but they want someone to take their position, and that someone could be you and me. If a person is saying, if industry is saying that they will be utilizing the entire amount or maybe 90% of the amount for the expansion, for buying new products, for buying anything, still they have a growth opportunity. So we can still apply with them. Of course, after that, we have to look out for their financials. At least the financials should be there for 3 to 5 years. If the financials is not for at least below 3 years, do not apply in that company, or I would prefer that the financials should be at least for 5 years. So when you look out for all these information, only then go for any kind of. Otherwise, understand IPO has all these negative and dark things in them, and they will suck out our money. Hope this information is useful to you guys, and do not forget to subscribe and like us, and I'll see you into my next video. Have a nice day. Take care. Bye bye.